Yo, yo, yo. What up, people? There is a lot to talk about. Probably not going to be a short video, unfortunately. I probably should write things down, honestly. Oh my God. First of all, fuck you, Bears. You guys are so clueless, it's insane. How you guys are still bearish right now, literally breaking the biggest resistance of the entire year, and you're still staying bearish. It's just beyond me. But we'll get through all of this. Lots of things we want to talk about. Last week went down literally perfectly, and I fucked it up. I didn't get as much as I should have gotten. And we literally made our video on Sunday explaining the exact path of what would happen. We wanted to see a gap up or spike early on Monday, and then a failure into Tuesday with the weird coil with the gap up on CPI filling the gap from above, and then it just rips higher. Like literally exactly. I mean, it was so nice. And you can see it. And this is why we believe this is a real move. Okay, this is a very, very specific move that happened. When a wave pattern happens that you're expecting, it means that it's real. It means that it is what you were expecting, and it should continue with what you were expecting. You're not going to have an exact pattern play out and then it just falls apart. It's very, very, very rare to do that. You saw on Friday here, August 5th, you had a violent sell-off that held. And usually when you have a violent sell-off before a breakout, that is a real move. So you get the violent gap down, and then this is the kickback to the downside to allow it to rip. And then we got exactly what we wanted to see. And you can see how weird of a coil this was. On the futures, you got a neutral print right here, which is an extreme coil right on the 200 hourly. So you can see how weird of a coil it was going. It was trending negatively, but the MACD was diverging positively. So it's very weird, exactly what we wanted to see, and we wanted to see it rip on the CPI. Perfect. Exactly what we wanted to see. And then it blessed us with this magical neutral print on the daily. Anybody who watches my stream understands neutral prints are extremely important. They have a very large significance in the wave pattern of whatever you're looking at. Neutral prints, I don't want to go too far into it. I'll do it briefly. Neutral prints are the market is not bullish or bearish at that moment in time. And usually most of the time it will instantly start the new trend in a very violent way. And depending on how the wave structure looks, it will move in a specific kind of way. And in this case, we wanted to see a huge gap up into a rip the next day. We got exactly that. So this worked out really well. The last time this happened, a neutral print on the SPY was literally here. I look back. This was the last time, October 2018, right? Neutral print, straight down. You understand what I'm saying? The time before that, neutral print, right at the bottom of this bear flag, straight up. The time before that was January 2017. Right here, the whole year of January, straight up. So you get my point, and you'll see it over and over again. You'll see it in regular stocks everywhere, okay? It's very, very significant. It's a point of neutral momentum, and there's different other patterns that can happen. If you get a neutral, you can get a red candle the next day, and then you can start the uptrend. So it's just specific. It's hard to explain like everything about it, but that is very, very, very significant, happening exactly on the biggest breakout of the year, exactly at the breakout price, 420. Also, the tick hit 1700, 1733. 1733. It was the highest print since October of 2021, when we had that massive stabilizer wave from October to November in 2021. We've never broken before above that since then. We did it briefly here in May, which we saw it was May 20th was the bottom, was when I bought calls going forward for August. And we broke it here on the CPI. So the fact that it broke that on the kickback, after getting kicked back to the downside here, and then breaking to the upside, confirms that the move is real, and you're breaking this downtrend here. Okay, so there's two trends you could have here on the SPY. You could have the upper thing here, and you could have it go through it here. I like this one here because this was a blow off top. And then the way it moved here was very, very overextended. There was a little J hook here, a gap down, and went up very violently and then got violently rejected. Usually when you get that type of quality of movement, it usually means that it never should have gotten there, and the trend lines generally don't go tip to tip, but they can, and this sets up perfectly for the 200-day right here. So you'd expect to see some volatility here as well. But then again, you have the same exact thing. This move was very, very weird. I was very weirded out to see that it was gapped up like 1% in the morning that day. I was like, that should not be gapped up that much. And I was expecting a really violent drop the last 2 weeks of April, and boom, that's what happened. And so like it should never have gotten there. It shouldn't have extended that far up, which makes this trend line very possibly significant. And it happened exactly right here. So I like this a lot. And it doesn't really matter because you have the same trend line here. Also, the closing prints of the daily are important. We got the daily, that looks fine. The weekly, we already broke it. So if we do weeklies and we look at what we did on the weekly cross, where are you? Right here. So we gapped up, got hard rejected, and then we got the consumer confidence and went and we broke through it. So the weekly closing prints was that. There's just so many things. This morning, this evening, we had a huge gap down on a wick here on SPY, going down 0.7%, but we didn't actually go down 0.7%. It's one of those glitch trades that you usually print that. Open reds are huge. Everyone knows that if you get an open red, that's a huge coiled momentum that can happen at tops or bottoms. For example, you get an open red right here on the weekly on the SPY, and it was actually the top. It means there's extreme compression. It gaps down and closes green from the open, but still closes red from there. So there's just extreme compression going on. Usually happens at tops and bottoms. You'll see it all the time, like on the daily here. Open red, open red, open red, open red, open red, right? So here you're getting open reds because there's extreme compression right before you're breaking a trend, and it's just another thing that shows the confirmation of the move. So people don't, like, you don't understand, like, we're literally we're breaking out of a massive coil and people are still bearish. Like, this isn't going to just reverse. This is just on its way up. The only downside you're going to get is a blow off top and consolidation lower. You're just trying to fight a major trend. And that's what happens. I literally explained it for months that not buying calls here, you're going to get fucked because you're going to be chasing up here. You're not going to be able to go heavy and put buy and shorts. And all the bears, they're not going to want to either switch their position, go long, or go long hard. You can't go heavy here now. Okay, now you're going through all this. And then if and when you break through this, now you really don't want to go long hard or heavy because you're so high up already. Get fucked. Like, that's the way it's set up. We've talked about this forever and ever. This coil here was extremely coiled with a bullish bias this whole time and a rollover. And we were doing the complete opposite pattern. We explained over here in the video that we're doing the complete opposite, which is exactly how we figured out exactly the pattern, what was going on this week here. So, if it was doing the exact opposite of this, it would have done this, and it did do that. And what that means is this is not a blow-off bottom. The way the wave dynamic is set up, this is not a blow-off bottom. This is like pushing a beach ball under the water and letting it go. You understand that analogy? So you let it go and it gets up to the flat on the water. It doesn't just stop. It explodes to the upside. And that's what this is. You're getting this coil here with the bullish bias. So you're stabilizing up. You get to stabilize up here. You even get this is a very violent stabilizer. You even get this. And you notice how everything lines up perfectly with where we are right now. The closing print of that. We got the wick back off that. We get that. So everything is literally right here. We really want to see this rip out here on Monday. But the beach ball thing is you're pushing down and letting go. We hit our 364 glitch trade that happened here on January 25th, which we marked as the bottom, that we knew that would be a bottom. We didn't think that it was going to do that. We thought that it would go much higher and then flash crash into it, but it did that first. So it is what it is. And so you end up going long here. And the only algo that can work, the only thing that works after doing this, after hitting that and doing this, is all-time highs. There's nothing else that the market can do. And there's so many fucking reasons that I actually will get into in this video. There's so many reasons for that. Having a 6-month glitch trade getting hit, which one am I deleting here? Having a 6-month glitch trade getting hit there is nothing with the setup and the upside energy that we have that the market can do other than all-time highs. SPX, people don't realize that we're chasing a 100-year uptrend. This is the Great Depression. This is the dot-com bubble, and we hit it in December. People don't see this. This is what we hit. This is what we got rocked off of. As soon as we touch it, boom, got fucking wrecked. You get a glitch trade down to here. We touched the glitch trade, and where are we headed now? The only other algo that you can go to is this green line. I thought it was the yellow line because if you go tip to tip for 100 years, that's where it was. But I knew there was a shit ton of down momentum up here. I just thought we would hit that first and then roll over really hard. But then we got this really weird chop. It's just a shitstorm. Because I knew the VIX wouldn't go up that high. And so we got this freakish downtrend that it's never happened before. So now we're literally headed for this. This is where our target is for the flash crash. This fucks everyone. The bulls go all in. The bears capitulate. And people don't realize, and this is another thing, the fucking idiot bears keep saying, oh, we're rallying on low volume. That's what indexes do. They rally on low volume. You get the high volume at the bottom on hammer candles, whatever you want to call it, and you rally on low volume. And what's going to end up happening based on the way this is set up is you're going to get increased volume towards the top third and the top of the market. You're going to get blow off top movement, and people are going to be thinking that it's a start of a new trend, and in fact, it's a blow off top. These people are actually they completely clueless. It's insane. And you see it everywhere, literally everywhere. You hear it everywhere. Even CNBC talks about it. Like, it's just clueless. Don't know what they're saying. Don't know what they're doing. So push down, you come right back up to the water level, and boom, you get released. 1700 tick on the CPI. This thing is going to the fucking moon, period. We can go through everything. Nikkei, we talked about how this was breaking out. Okay, rejected. Actually, we'll do it on this chart. Nikkei. Rejected at the zero line, rejected at the zero line, came up to the divergence. We've expected this to not get rejected and to go reject to the upside. It's exactly what happened. Clean as fuck. Clean as fuck doing that. DAX about to explode through the zero line here. It looks really, really clean. It had a negative algo print on June 6th, and then it had another algo print on August 3rd-ish right here. We don't know if it's bullish or bearish, but if you end up exploding up from here, then it's a confirmed bullish, and it would absolutely rip face going into the end of the option expiration, going into the end of August. That's that. Again, let's see. So you see how you get a neutral print up here on the MACD? It's rejecting the crossover on the MACD. If you have the MACD bounce off of this and go to the upside from here, you get a massive move to the upside. You get a very big move to the upside. And if that happens, the up moves in the market get very big and the down moves in the market get very small. When you have MACDs really high, that's the function of it. Down moves are very small, up moves are very big. And so it gets very, very difficult to get this quote unquote crash that bears keep talking about. You're not going to get any fucking crash until we hit all-time highs. I expect volatility in September, but we should go to at least 450 or even 460 before we have that volatility. Now, people are saying that the overbought on the daily is really bad sign. Generally speaking, it is, but you could also have an oscillation at overbought and have a very, very strong uptrend. And usually on last waves higher, you get that oscillation. And so again, this is another function of the bear market rally or final waves where bears refuse to capitulate. And so they sit here and they're like, fuck that, I ain't buying the shit. And they sit back, they watch. Another thing is when the 200-day moving average gets breached on a closing basis, algos, quants immediately buy the market. They're forced to. And we're really close to it. We're really close to it. Oh my God. Right? 1.5%. So there's that. We have retail sales on Wednesday. We have the Fed minutes on Wednesday, 2 p.m. I think those are the two big movers of the week. Now, if you're looking at the weekly lower wicks for the last 4 weeks, we dropped about 1.5% at this here. Then you dropped about 1.2%, then you dropped about 1.3%, then you dropped about 0.8%. So the lower wick is getting smaller and smaller and smaller as you progress. And the importance of that is the same exact thing. If we're looking at for this week, you're looking for something lower than 0.7%. So if we close right here and we drop down here, 0.7%, which is the top of that. And if you look on the hourly of the SPY, nope, it's not on this, it's on the futures. We got a neutral print on the hourly on the SPY right here, which is exactly where the glitch trade went to. So it's possible we go to the glitch trade and we hit it, which goes down 0.7%. And if it happens, I would want to see it happen very violently within the first half of Monday, tap it, and then rip higher. And if that's what happens, all you need is one violent candle to the upside, and you're expecting massive upside this week. This is an insane uptrend on the MACD. It's actually ridiculous. What we were doing here was breaking the monthly middle Bollinger right here. So this is, let's see, 42.45. I'll do this quick. This is 425 even. 425 even. So basically it touched it here, got rejected, and then we got the consumer confidence and chop, chop, chop. Then we had that end of day pump, and then we broke it. So it would make sense if we broke the monthly middle Bollinger for August that we would retest it early on Monday. And if you violently bounce off of that, you're looking for the activation. If you violently bounce off, that's the trigger. You're headed to at least the 200 day. And the same thing on the SPY futures, it shows the same thing. So what I expect to see on this is we have the retail sales 830. If we go up, I expect to see, let's say 1.5%, something like that. I want to see, depending on how we close, if we go above it, I want to see us sell off in the morning and gap like below it. So on a futures print, you'll have a lower wick going to the 200 day, and then the FOMC, the Fed minutes are 2 p.m. and then 2 p.m. it holds. So you're getting a violent retest of the 200 day, and then it holds, and then it sets up for the rip going into the Friday. Or if we close below the 200 day, then I would think the retail sales breaks us through it, and the Fed minutes we just rip through. Either way, you're looking for some sort of volatility. If you're above it before Wednesday, I would expect a drop. If you have calls, you could sell some and then buy some puts. You win either way. If you're above it, I would expect the gap down and it holds. If you're below it, I would expect the gap up and maybe a retest. Maybe even on the Fed minutes, you drop down into it and then you gap up the next day type thing. Something like that. You want to see a little chop here. On the Qs, we broke this line, everyone I just drawn. We broke this right here. You could see violently rejected, and then we broke it on the consumer confidence. So again, violent retest early Monday, 0.5%, 0.8%, whatever, and then it goes up. That's what we're looking for. The Russell should outperform the S&P. It just started to. And other things show it's going to do it. VIX, I want to look at the VIX. People don't see this, which is actually insane to me. There's a 5-year uptrend that's about to be broken. The way this coiled is that it wanted to break it here, but then the VIX stabilized up. This is not a healthy move in the VIX. It's a very weird move, which also leads into the fact of how it's doing this. And everyone's like, what the fuck, man? It's being suppressed. Everyone's, oh my God, it's actually, shut the fuck up. Shut the fuck up. Either you know or you don't. Shut the fuck up. It's simple. This is a very, very irregular move. This is not a bullish VIX move. This is like the market's so bullish, it's bearish, where it wanted to go higher and it kind of got caught on something. And so you end up getting this blow off move, this stabilizer up, right? The beach ball goes up, the beach balls goes down in the market, the VIX goes up, and then it gets sent. And you're coming into this. And the reason why it probably did that was because it's going to break this. If it breaks this, the market's going to have a really fucking large move higher. And I can't see the VIX not breaking this on this rally. There's almost no way the VIX is going to stay above 18.5 if the market's going to run another 10% higher, even more than 10%. So if and when it breaks this, which may be at the 200-day moving average, the market's going to have a fucking gigantic rally. Again, there's so many fucking things. Again, VXN glitch trade, we talked about this, okay? This happened right here, right on the Fed day here, and then you had that blow off move where we hit the 364 glitch trade from January and instantly straight down and to the right. I love how people be doing this. They'd be like, oh, here's this downward wedge, it could break out, it could break out. It's like, no, it can't, it's not gonna. This is a fucking magnet. We didn't know if it was gonna be a magnet or not, but the probability was extraordinarily high because the wave setup was for the market to go up from here. And it was just very, very kind of, it was stressful because if that is a bullish trigger for VXN, then the next move higher within like a couple of weeks of this would break the COVID high. And I didn't see that, but it was a very small possibility because this is the move that happened in the VIX was just like once in a lifetime type of thing. So I know what I've seen for years and years and years, but I was, it's kind of scary. It was a little scary. But finally broke down. This is a magnet now. This is also the low of the year for the VXN, for the Qs, which is also the low right there. So this is our first target, and this is where the Qs will go. Again, Qs, there was a glitch trade, and this one I wasn't aware of because it didn't show up in a merit trade, but someone else told me about it, and it makes sense. There was a glitch trade on June 22nd here on the close. You can see this at the bottom. It spiked up, and then it sold off the first consolidating wave off of the bottom, and that coil in produced a glitch trade up to 388 on the Qs, which sounds so stupid, right? But when he told me it, I was like, that's actually possible because that's how much energy I see in the market right now. I was like, but I'll see it when I believe it, right? Because you see this and you're like, yeah, okay, it ain't gonna fucking happen. But I know I saw enough energy to get to here for sure. I was like 388, usually you get more of an overextension when this shit happens. So you got a glitch trade to 388 and then everything reversed. You got the VXN glitch trade, everything was going on, right? And then you follow this and look what we're doing. Just breaking through everything. We instantly went up, filled the gap, got rejected, and then up and to the right, up and to the right, up and to the right, broke the downtrend, up and to the right, broke the downtrend, and we're off. So we're looking for at least here into like before September 10th. About 5 to 8% higher. And this is where I think September volatility happens. So everybody's saying that we have a low volume rally going on in August, and when 1 September happens, the market's going to crash, right? That's what everyone keeps saying. And just the fact that everyone keeps saying that, even CNBC and everybody in the world saying you better not run into this rally. You want to see us rally through August and early September, and then you get it will become a bull trap, however high we go. And we should get September volatility. It's possible we don't. It's possible that we do run all the way to all-time highs with the SPY. It's just less likely. But it's possible. It's actually possible. I would just want to see more so, because if we're going to have a flash crash in October, which I still think we will, like a big one, like all-time highs below to the low in like a 2-week period, something insane. If we're going to get that, you want to see a pre-move. You want to see the VIX show itself, so to speak. That's how VIX always sets up. The energy for the crash is already in the market, but you need to start seeing in the middle of the uptrend, you need to start seeing the activation of it. And it does it in various ways, and we know how to look at it and find it, and nobody else knows how to. But so we want to see the volatility in September. It will show that the VIX trend is still alive and still there. And so that all matters. And then there's also UVXY glitch trade that no one wants to believe. We literally said that the normal wave pattern for UVXY historically has always been this, where we break to the downside. And I'm not going to sell my shit. I'm going to hold through this because I do not believe UVXY is going to go. The sentiment, so many people were bearish. Everyone in the mother was buying UVXY. And historically, when that happens, it never goes up. It never goes up. There's a very, very specific pattern that has to happen, and the sentiment is never mega bearish, ever. It is so difficult to catch a move in UVXY, to catch one of these 400, 500 percenters, 1,000 percenters. It is extremely difficult. Like, oh yeah, well, which one you're gonna buy? Which one you're gonna buy? Which one? Oh, you bought, like, it is extremely difficult to do it. So what ended up happening was, you understand wave dynamics. There was a glitch trade here in May, down to 4.34. Can we get it? There we go. 4.34 here. Okay, this is where we had it. It becomes a magnet. This is the stabilization of the VIX, of the downtrend in the market. But what it did was extra. This isn't a normal pattern. What it did here, it's not just preparing for a flash crash, it's preparing for years of volatility. That's what people don't understand. This was not just a correction or whatever. This was a freak a freak of nature. It was actually a fucking freak of nature on what it actually did. There's nothing even comes close to what it did since its inception, that I've literally watched it since its inception. It was actually fucking so scary of how much down momentum is in the market. But people don't understand, like, this is a guarantee. And what ends up happening is the market stabilized up in May here and starts to decelerate to allow for it to make its final run and also prepare for the correction to come. That's how it works. I'll show you in a sec. So before the market can crash, this has to get here. Period. Because it's stabilized up here. It's like, it's called, I consider it to describe it like the clean and jerk. Like when you're carrying a really heavy item, like you're carrying the barbell, and you lift up to go underneath it and to grip it and to push it higher. That's what the market does. So if you look at it happened right here. See that really violent drop? That's what happens. So it stabilizes up and then kind of lets go for a split second, and then you get boop, boop, and you get that spike. There's also the VIX swell that happened here. We talked about this in past videos, that the VIX was going up while the market was going up for a couple of days, and it was pretty significant and noticeable. And whenever something like that happens to that extent in my history that I've seen, you almost always revisit it. And so this was also a target for this year of a possibility. And so lo and behold, it literally did it perfectly. But if you see right here, it stabilizes up. Look at the MACD. It was peak momentum. Up, down. But you don't just reverse. It's a freight train, this, right? So you don't just instantly go down. You slow. This was a stabilizer up. Has anyone in any video, fucking anywhere, explained why this has the highest volume on the whole fucking year? Has anyone explained that? Has anyone explained why this day here has the highest fucking volume? Anyone? Can anyone make sense of that? Anyone? If you're breaking this kind of an uptrend, okay, you're fucking dropping huge. You're just getting annihilated. Whoop, especially because of how quick this went. It didn't actually go that quick, but kind of. It did it here. But the fact that it chopped so weirdly here, like it broke the fucking uptrend and it just didn't go. It was very weird the way it did this, and everyone was so bearish on CNBC November, December. I was like, this ain't a top, like this ain't a significant top. There's no way. Everyone's super bearish, and then it breaks down and does this. This is a stabilizer. This is not a failure. This is not a breakdown of the uptrend. This is what happens when you break an uptrend and you hit horizontal support, and then you chop and you go higher. And this is a fake breakdown. This is a fake breakdown. This is not a real breakdown. And that's what makes sense. So why the only oversold RSI of the whole fucking year was right there. Because it's coiling up. As soon as it breaks, it stabilizes and it's coiling up to the upside in momentum. RSI never gets oversold again. And what it did was a freak of fucking nature to get down here and subdue the VIX under 35 and never get oversold again. I'm telling you, it's never done anything like this before. There was a small fractal of what it did in the top of 2000, but never to like this extent of what it did. It's so freakish. So it stabilizes up here, goes down, but it stabilized up. Where did it stabilize up to? 4.34. So you clean and jerk, you lift up the bar. That's as much momentum it is. We don't know where S&P goes. We don't know where the S&P goes when this touches. We don't fucking care. All we know is it's going to get there, right? That's all we need to know. That's all we need to know. Stop worrying, stop complaining, stop bitching, stop fighting it. Okay. There's that. Stabilize up, starts to roll over, maintains momentum. Also this, I don't know why people don't have ever seen this. The Wilders weekly MACD touched right here. We were expecting an activation on this week. We talked about it in our videos and we got it. Literally the Fed week and earnings week touched the zero line on the weekly for the first time since 2016. Bottom. That is a massive activation, as a massive technical trigger. It represents sine waves. It represents wave structures. So very, very clean. And what I was talking about before is that it's decreasing the lower wick of the month, every week here, right? And the importance of that is this. Let's see. The importance of that is this. See the MACD coiling up like this? If this is a bear trend or bear market rally, which technically it kind of is the way it's moving, it's not really moving in a healthy way, is that it's trying to go lower and the market is so bearish, it's bullish. The way this is set up is that this is a blow off bottom. It was ready to go up here, and then you blow off bottom to the downside. Think about it, it's already ready to go up here. It wanted to go up here. Whee! And it got hard rejected here. Right? What ends up happening here? You get this huge coil of momentum that like instantly wants to get up to here. It doesn't want to go down at all. It's like hugely coiled to just spring to the upside, right? And the wicks now are getting smaller and smaller and smaller to the upside the closer you get to the crossing of this. So it's kind of like coiling up to explode to the upside. That's the one wave thesis. I'm saying it's going to happen. It's just one of the things that we see. And so if the market moves accordance to that, then you know exactly what it's doing, which is why I expect to have a less of a wick this week, that 0.7% we just talked about, or in 0.4%, which is a probability, and just it explodes higher, hits the 200-day, fucks with it, and explodes through it. And then we get the first positive weekly move of the entire fucking year. Does it have to happen this year? Pretty much. We just had the breakout of a coiled move that held back for 9 trading days. It's not going to stop. It's not going to chill here. People are saying like theta week. It's not fucking theta week, bro. It's not theta week, bro. So, which is why I want to see an activation this week, boom, into a gap up next week, and then I want to see a theta week. And also GameStop earnings the last day of August going to the first day of September. Almost all the memes look like they're going to rip. They are ripping. We talked about it. It makes sense that GameStop earnings have always produced sell-offs or not explosive moves to the upside. I think this time actually GameStop's going to rip to the upside on earnings, and it makes sense due to the monthly candle. If it has a huge up move going into it this week or the next couple of weeks, and then you get a gap up, because then you can get a lower wick and an upper wick and still maintain the up momentum and the down momentum of the crash coming. It makes a lot of sense both in the indexes and the meme stocks as well. So that's the type of move I was looking. So if that's what's going to happen, my thesis is that we rip, we gap up early next week, we chop, and then we have one last final blow off move the last week of August, the first week of September, going into Labor Day, which are usually inflection points. So it makes a lot of sense, and that's all contingent upon Monday, tomorrow, and what it does this week, et cetera, et cetera. And so you just play the probabilities, but all in all, you fucking know we're going to hear VXN is going down to where it's target. If the VIX breaks that uptrend, the market, the bears are completely fucked. It's algorithmically linked. There's no way out of it. The dollar, people are talking about the dollar. There was an algo switch for the first time since September 20th. This was a bullish trigger here, and look what it did. And there was a bearish trigger for the algos literally right here, the 15th and the 18th. And we mentioned it, and look what it's doing. Down to the right. This should continue lower. This should put a tailwind into the market. There's a lot of stuff. And also the bond market. I think the bond market is actually what's going to cause the flash crash. The Fed is priced in. The recession next year is not. When the bond market goes low enough, it's going to price in the recession. And that's what the flash crash would be about. It's a black swan. So everyone thinks that talking about recession this year, not realizing that the recession actually is next year. That's how waves work. That's how it all sets up. Like, for example, I'm just going through this. This was Ebola. This flash crash here prices in the ABC here. Look at the lows. Oh, isn't that amazing, right? Then you have the VIX blow up here, priced in this megaphone pattern. Oh, isn't that amazing, right? You always usually have a violent move lower that prices in future volatility, and it doesn't look any different. It looks exactly the same of what's going on. There was a 3 point here, 3 point here. I think we're going to get another 3 point here over the next 3 to 6 years, give or take. I don't know how far out yet, but about 3 to 6 years. This isn't it. This ain't it. This ain't it, sweetheart. This ain't it. Why? Because this ain't a move. Look at UVXY. That ain't the energy that's in the market. This motherfucker has enough energy to go to 30 to like 60. Yeah. And all the people who bought UVXY, all the Wall Street bettors and everyone else, this has enough energy to go through the fucking universe. There's a lot in it. And people don't realize it. They think that it's just a shit product. They're like, fuck, man, market goes down, it doesn't even go up. Fuck this shit. I'm out. It ain't gonna get easier when it gets down to 4. We're not there yet. So all-time highs, and then it gets clicked, and then we get wrecked to the downside. There's just so many things. I mean, there's so many things. Like, I can only put on one fucking video, but we're just looking at this week. Neutral print, like, it's so important. Monday print, so important. We got the overbought. Qs breaking here. I mean, Apple. Everyone talking about how Apple. So Apple literally hit a fucking 5-year trend. 5-year trend on a blow off bottom and instantly went straight up. This wants to go up to the 0 line. It doesn't have to go straight up there. You could chop. There's a gap at like 2% higher at 175-ish, 177-ish. You could chop, but to get from here to here, you have to kind of go higher. You got to get 178-ish near all-time highs. And so if it actually explodes through, you're breaking all-time highs. We would expect to see it hit the 3 trillion market cap, something like hit the 3 trillion by early September, then get rejected. And then somewhere in September, again, we expect it to hold maybe by the Fed meeting the 3rd week of September. And then we rip through October to all-time highs. Something like that is the structure so far. So 3 trillion, oh, we did it. Get rejected again. Everyone's like, yeah, I fucking told you, double top, Apple's going to crash, overbought. And then the Fed, Jay Powell does his dance and everything gets sent. Something like that. So yeah. We're chilling hard. What happened? So this is insanely bullish if this holds, okay? Again, we talk about compressions. If this holds and it doesn't even go here and we gap up like 1% tomorrow or some shit, this is insanely bullish. This is like a huge compression to squeeze lower to get shot to the upside. Okay, so there's a lot riding on Monday. If we literally like sell off like to here, I would expect 420 to hold and to go higher. I don't expect anything other than up. 1700 print, super bearish still. The 200-day. So many stocks look like they're about to rip out. So many stocks look like they're about to rip. Penny stocks, meme stocks, just ARK stocks, everything that got annihilated are all curling up. Look, it's just absolutely insane. And that doesn't just set up overnight. Like, it takes months to set that up. So that's another like kick in the ass for the bears and another tailwind for the bulls. Yeah. All right. So I think I said enough. Just all in all, bears, you're fucked. Stop being bearish. You're trying to literally short counter trends. Also, there was the second most shorting 2 weeks ago and last week in the entire market. So people really thought this was going to fail. Now they're fucked. They have to cover. Right? And nobody wants to cover. And this is the most underpositioned market like ever. So there's just so many things. GG. Look for the things I said. And I can't stand people like, well, there's a line here and, you know, we ran a lot. We're probably, you know, going to hit it. And like, you know, yeah, there's some gaps lower. We might fill them. Like, you know, if you don't know, if you don't have like probabilistic, probabilities for algorithmic moves or anything, like, shut the fuck up. Like, what are you saying? Yes, the sky is blue. Yes, people have 2 feet. Like, we know. Like, GG. Let's fucking crush this fucking market this week, baby. Let's fucking crush it, baby. I'm fucking amped. I'm so ready. GG. Peace out. Peace.